Welcome to the BF Anderson Technical Report for February the 13th. This is a bull market, no doubt about it. I mean, you can see here that the NASDAQ continues to make new highs. The moving averages are all very consistent, very powerful uptrend. On the weekly basis, we're seeing similar action. On week by week, this market makes new highs. Just made a new high this week. The 35-week moving average is in a strong uptrend, not close to being violated at all. Looks very positive. On the ratio, which we're looking at what we call the aggression ratio, how aggressive are investors? In other words, are they buying technology stocks or are they buying toothpaste stocks? Right now, if the line is going up, they're buying technology stocks, mainly semiconductors. This is a very positive environment for technology. Here we have the S&P 500 index making new highs. The MACD index, which is a measure of momentum, is showing very positive momentum, but it seems to be getting hot. That's to be seen because, as our friend Gerald Loeb says, how hot is hot, how cold is cold. But things that are kind of lukewarm are like the Value Line Geometric Index, just cannot get going. This is the average stock. So these indexes are red hot because of just a few companies, without saying any more, things like Apple, Microsoft, Google. They're very large cap, trillion-dollar companies that are driving this market. But as they say, if the generals lead, the troops will follow. So this is the troops. Hopefully they follow. Now, we want a broad market worldwide. This is the global Dow. We're seeing a buy signal on the MACD, very positive. Everything looks good. We are on a buy signal on the 1020 Golden Cross. Now, on the Golden Dragon, we're close to a Golden Cross. In fact, we're right at a Golden Cross as we speak today. The Chinese stocks are improving. This is the Invesco Golden Dragon Fund, which is an index or an ETF of all Chinese companies that trade here in the United States. As you can see, went through real negative momentum, turned positive, now breaking out. That looks very positive. On the S&P 600, which is the small cap stocks, again, we're not making new highs here, but we are seeing improvement. It's very important that the small caps get going, I believe, and eventually that may happen. On the put-call ratio, which is a measurement of sentiment, we saw a move towards fear. Now we're back in greed. Sentiment continues to be somewhat negative, but we are using that as a secondary indicator only. Now, just to go back in time a little bit, I wanted to take a second on this graph. This is 1982 to the year 2000. That was an 18-year secular bull market. It was a fantastic period. Now, what happens after that happens where you get that strong uptrend, then you go through a consolidation process. Actually, more than that, we went through two bear markets. Bear market in 2000, bear market in 07-08, and then we broke out in 2013. So the question is, are we in the process of going through an 18-year secular uptrend, which will take us out to 2031? Who knows? But the pattern seems to repeat. If you go back and study the 1920s, you'll find that there's bubbles in the market. And after the bubbles tends to be periods of consolidation and then breakout. So in other words, we had the bubble in 1929, which was the bust of the railroad industry, basically. And we went through a bear market in 29 that really pretty much lasted till about 1948. We broke out around 1950, and then we rallied till about 1968. Then we had what we call a bubble that was called the Nifty 50. It was 50 stocks that everybody had to own. Things like Xerox, Avon, you know the list, General Motors, Coca-Cola, the whole deal. So there was a bust in 1968. So we had a bust in 29, a bust in 68. Then we had a bust in 2000, which was the dot-coms, the dot-com bust. These busts or these bubbles form, pretty much once a generation. It's not like, every 10 years or every 5 years you're going to have a bubble. So what we're saying here is that we think we're on our way to a long-term bull market that could last as much as 18 years, very similar to what happened back here after the 1968 bust. but it took a long period of consolidation before the market were to take off again. So just be open-minded. Realize that we are in a bull market. This can go a lot longer than we realize. Now, other just little economic things we want to look at. Here's the unemployment rate. Now, I've plotted this on a monthly basis. As you can see, we're down to about a 3.5%, actually a 3.6% unemployment rate. You see as the unemployment rate comes down, the stock market goes up. It's all about consumption. The better our job situation, the more consumption there will be. That's the answer to the economy. Now, this is just another graph showing the S&P 500 earnings. As you can see, since 2010, we had the big recession. Corporate earnings have been in a very strong uptrend. So has the stock market. So as long as consumption keeps up, which is the millennials will be the primary consumers because they've entered the consumption years, and that will hold up S&P earnings, we should continue in a bull market. So here are the top 5 stocks that hit our list this week. Advanced Micro Devices, semiconductors broke out making new highs. As I say in the past, semiconductors are going to be a big deal for many years going forward with all the technologies and disruptions that are taking place. This is Axon Therapeutics, biotech, looking better, kind of pulled back after a major up move after an earnings announcement. Then we have a company called Cardlytics. This company is involved in analyzing credit card transactions to help, providers or sellers of products and services understand what consumption patterns, what are the millennials buying. That's the kind of thing they would do. So Cardlytics looks interesting. Here's Lam Research, again, semiconductors. They're more into the fabrication area, but again, as semiconductors continue to dominate the economy, that's what you got to look for. Again, Tesla continues to look strong. However, we're seeing somewhat of a consolidation here. Would not be surprised if the stock doesn't consolidate between 700 and 800 for a period of time. Now, in April, we have the Battery Day announcement, which should be meaningful. So be watching the stock around April. So if you have any questions, give me a call. Thank you very much.